December, maybe. Well, they are the last it is the last FANG stock standing. They being Apple. They're going to report after the bell, and some say these numbers can make or break not just the tech sector, but, well, the market. Let's bring in Lou Basenese, founder and chief analyst of Disruptive Tech Research. Lou, good morning.
Good morning, Cheryl.
Well, this is the last one, and, even the mighty Amazon had a fall when they reported earnings for this quarter. What do you think about Apple? Obviously, it's all about still the iPhone for this company.
It is. I was on earlier in the week praying for today to get here because I think we really need a strong report from Apple, like you mentioned in the lead-ins, that Apple's going to set the tone, not just for where their business is going, but where consumer spending trends are going in the all-important holiday quarter. I think the key metric to focus on is that average selling price. Last quarter, it jumped from $606 to $724. If it jumps, it's on its way to $800. The closer we get there, the better the signal is going to be for the broader market and for Apple in particular.
But this quarter, we should point out, is only going to have just a small piece of the new iPhone, like the new 10, all the new products that they had come out with, especially on the iPhone line, right? I mean, that's just a few days of selling, correct?
It's just a few days of selling of 2 out of the 3 models. So the 10R is not going to be included in these numbers. So you don't want to read too much into the early numbers. But again, we know from previous launches that even a few days worth of sales data is very predictive for where Apple's going and where consumers' attitudes and spending
the stock is
are.
up. It's interesting. The stock is up 26% for the year, but it lost about 5% of its ground in October. But this is the only FANG stock that really has mirrored the S&P 500 in performance. But do you think that if we do get a positive result from Apple after the close, that would actually lift not just the tech sector, but in particular those FANG stocks, which it all kind of seems to correlate, whether that makes sense or not, because they're different companies, Facebook and Apple or Netflix. It seems like they all kind of go in lockstep. Why is that, Lou?
Look, I think it's a great question. I would argue that the FANG trade, the correlation fell apart last quarter, a quarter ago, when Netflix reported those dismal growth numbers. And really now investors are being much more selective. I think you have to look at the FANG stocks that have the ability to expand into new markets, and that really leaves you with Apple and Amazon. So the valuation on Apple is probably the most compelling for all the FANG stocks, followed up by Facebook. So I think those are...
We'll see what we get. Really quick before I let you go, I do want to ask you about the broader markets. Obviously, October was an incredibly volatile month and a rough month, not just for U.S. markets, but globally, Europe as well as Asia. We saw a lot of pressure on our markets. But one thing that seems to be a little concerning to some is that you're seeing there was no safe haven. Usually, if the stock market is under pressure, folks can go to treasuries. They can find safe haven. They weren't able to do that in the month of October. Selling begets selling for treasuries and for stocks. Does that signaling to you that maybe this 9-year bull market possibly is coming to an end?
It's absolutely something to keep an eye on when those correlations between all asset classes come close to one where they're all moving in lockstep. It is definitely a cause for concern. So I think as we see the volatility ratchet up, correlations go higher, we have to be anticipating that one day this bull market is going to come to an end.
Yeah. So. Well, look, it's been a great 9-year run, and markets go up and down, and that's why we enjoy the ride so much. Lou Basenese, thanks for being here, Lou. We appreciate it.
Thanks, Cheryl.
Google's CEO has...